Hey everyone, now that we are in Q3 of FY24, the latest shareholding pattern for Q2 has been published for majority of companies. Now I always say that shareholding pattern speaks a lot about the fundamentals and attractiveness of the company. If promoters or FIs or DIs are increasing their stake, it suggests a brighter future for the company. As a retail investor, it gives a good idea in terms of which sectors and stocks institutional investors are bullish on. So in this video, I have identified stocks where strong hands of promoters or FIs or DIs have added stake and weak hands of public have reduced stake. And there are more than 40 such stocks in this list. Please note that this analysis is only the first step in terms of identifying potential companies. You need to deep dive in terms of understanding the business model, key moat, future growth prospect, financials, valuation, risk, and so on. So don't just invest in any stock just because institutional investors are buying them. This video is only for education purpose. Second, please note that I have not considered stocks where FIs and DIs increase stake, but it's because promoters have reduced stake, and that has resulted in increase in public holding. Basically, the idea is to identify stocks where net the weak hands of public have reduced their stake. Also, some companies have not yet published the September 23 holding, so this is not an exhaustive list. Finally, at the end of this video, I have shared some of the important observation in terms of which specific themes and sectors institutional investors are bullish on. Alright, let's not waste any time and get started with the video. Alright, so first stock where promoters have increased their stake is Union Bank of India. If you look at DI's holding, it has increased from 7.8% to 12.69%. So that's a significant increase. And even FIs have increased their stake from 1.46 to 2.89. Although the reason is because promoters have sold their stake, which is the Indian government since it's a PSU. But the interesting aspect is it's completely absorbed by the FIs and DIs, that's the institutional investor, and public holding has slightly increased. It's hardly 0.3% of increment. But net public holding is very low, and it's a positive sign that institutional investors are buying Union Bank. Now if you look at the share price of Union Bank, it has rallied a lot in last 1 year from levels of around 30-40 to currently around near 100 rupees. But if you look at the valuation, it is still trading at a price to book of 0.89, so less than 1 price to book. Market cap is around 75,000 crore and price to earning is 7.4. So valuation wise, it is still looking reasonable. Now next stock in the list is Shriram Finance. So FI's holding in the company has increased from your 49%, in fact 45% to now at 54%. So there's a significant increase by FIs, and DIs have increased their stake consistently in last 4 quarters from 11 to 14 and now 15%. So both institutional investors, FIs and DIs, are consistently increasing stake in this NBFC, and public holding is just at 4.7%, that has reduced from heights of 18%. So clearly it's looking very promising. Again, the share has rallied a lot from levels of around 1200 to currently at around 1850. But the interesting part is the valuations are still looking decent at just 1.58 and PE is 11. Okay, next stock that institutional investors are adding is RBL Bank. FIs have increased their stake from 24% to 28%, now 30% in last 2 quarters. And DI's holding has increased from 17.9 to 19%. Public holding has reduced significantly from 59% in June 22 to 56, then 55 it increased, and then again it has reduced from 53 and now at 50.45%. And recently even Mahindra & Mahindra has made an entry in RBL along with broking firm Zerodha. Next, so if you look at the share price, again RBL has also rallied a lot in last 1 year. But if you look at the valuation, its price to book is still 1.08 and P is 15.4. So valuation wise, and again it's a market cap of just 15,000 crore. So valuation wise still looking decent. Next is your Jammu and Kashmir Bank. It's a regional PSU bank, and if you look at the FI and DI holding, both have increased their stake in this bank. FI increased it from 0.8 to 2.6 consistently. DIs have increased it from 2.4 to 4.9%, and public holding has reduced from 31.9 to 29%. Again, Jammu and Kashmir Bank has also rallied quite a lot, but if you look at the valuation, it's trading at a price to book of 1.1 and a PE of 8.48. Next, we have got IDFC First Bank. This, if you are following this channel, I've discussed it multiple times. So if you look at FIs, it seems FIs are buying it big time. Look at this. From levels of 10.9% in June 22, FIs are now at 26%. Consistent buying and a significant amount of buying. DIs did sell it from 10 to 5.5, obviously because FIs are buying it, but this time both FIs and DIs have added stake, and public holding has reduced from highs of 38% to then 29, 27 and now at 25.6%. So it seems institutional investors are also bullish on IDFC First. In terms of share price, it has rallied a lot. We have discussed it multiple times, but if you look at the valuation, its price to book is 2.3, P is 23.4, and considering the brighter growth prospect for the bank in the coming quarters and few years, obviously it looks decent at levels of 90 rupee. Okay, next we have got Credit Access Grameen, which is basically a microfinance NBFC, and if you look at DII holding, it has increased from 11.9% to 15.7, and FI holding has increased from 9.5 to 11.46. Public holding has reduced from 11.7 to 6%. Again, the share has rallied quite a lot in last 1 year since the entire banking and financial sector has rallied. But the interesting aspect is that since we are in a upcycle, your microfinance segment is looking very promising, although it's a bit risky side where your growth comes at a very fast rate, but then there's risk of default. So market cap is 22,000, but price to book is looking slightly higher at 4.2%. So it seems the institutional investors are still finding value in this NBFC. Next, we have got another microfinance, which is Spandana Spurti, where FIs have increased. Actually, they've reduced it, but look at the way DIs have added it from 8.4 to 13%. Public holding has slightly reduced, and so yeah, this is about Spandana. Share price has rallied from levels of around 600 to currently 800. Of course, it dipped, and then from March, April levels, it has significantly jumped. Now, if you look at the price to book of this particular NBFC, it is at 1.8 and P 16.5. Next, we have got Canfin Homes. It's again a home finance company where DIs have increased their stake from levels of 23 to 24, 27, and now it is 27.4, and your FIs have made an entry at from 0 to 9, and now it is at 11%. Public holding has reduced from 45% to now at 31%. And if you look at the share price, it did jump a lot, especially during the recent rally, and then there's a correction, and it's been sort of sideways movement. And if you look at the valuation, it is trading at a price to book of 2.5 and a PE of 15.5. It's a small cap NBFC with a market cap of 10,000 crore rupees. Next in the list is Prudent, which is basically a wealth management firm and sort of your mutual fund distribution. If you look at the FI holding, in fact 0.6 to 1, and now at 3.8, and DI holding has increased from 9% to 15.6%. Promoter holding has been sort of constant, and public holding has reduced significantly from 30.9 to 22%. In terms of share price movement, Prudent has jumped from levels of around 700 to currently at around 1350. And if you look at the PE ratio, it is trading at 44.5. So, but it's just a micro cap company. But yeah, in terms of market cap, it's a small cap company at 5,500 crore. Next stock in the list is L&T Technology, basically a play on electric vehicle and software space, where DIs have increased their stake significantly from 4% to 8, and then increased to 10, and now it is at 10.7%. So consistent buying in last 3-4 quarters. FI stake in the company has not moved a lot, but net there's a good buying from DIs. Public holding, if you look at it, has reduced from 15% to currently at 9.5%. So consistent selling from weak hands of public. If you look at the share price movement, L&T Technology also rallied a lot, especially from March-April levels of 3,200 to nearly 4,800. But there's a sharp correction of around 10-15% recently after the result, and currently it is trading at a PE of 36.1, market cap of 45,800 crore around. Okay, next stock is another small cap IT company, Sonata Software, where DIs have increased their stake consistently from 13.7 to 14, and now at 16.3%. FI holding has also increased consistently from 12 to 13, now 14.98. So both FIs and DIs are consistently adding Sonata. Public holding has reduced from highs of 44% to currently at 39.4%. So weak hands of public are selling and strong hands of institutional investors are buying Sonata Software. If you look at the share price, it's been a one-way rally from levels of around 400, 500 to levels of around 1100. So stock has more than doubled in last 1 year. And if you look at the market cap, currently at 15,000 crore, PE of 33. And next stock in the list is one of our most discussed stock, also part of my portfolio, which is Newgen Software, where both your FIs and DIs have increased their stake. Look at it. FIs have actually added it in last 4 quarters consistently. Recently, they have increased from 15.3 to 15.9, and DIs have also added it consistently from 6 to 8 and now at 9.23%. Public holding has reduced from your 23% to currently at 19.3%. If you look at the share price movement, there has been a significant rally in Newgen from levels of around 350 to currently at around 1100. So there's a great up move in Newgen. And if you look at the share price in terms of valuation, it is at P of 42. So now there's a sharp rally, but the future prospects are very bright. Market cap is at levels of around 8,000 crore. Next stock in the list is more of an engineering and IT company where both FIs and DIs are adding stake consistently. Look at this, FIs are increasing stake from 31 to 32, 36. There's a slight reduction recently, but DI holding, look at it, from 23% to 24. Now they've reduced it to 21, but in recent quarter they've again increased it. And public holding, if you look at it, has reduced from 20% to 19, 18, 17 and currently slight increase at 18%. If you look at the share price movement, Scient share has also rallied quite a lot in last 1 year. And if you look at the PE ratio, it is trading at a PE of 32 at a market cap of around 20,000 crore. Okay, next set of stocks are from electronic sector, where first is your Dixon Technology. If you look at FI's holding, it has increased from 12% to 15% in last 2 quarters, consistent buying. And DI holding has increased from your 8% to 18, 23, 24 and now 27. So DIs are buying it big time. And public holding has reduced from highs of 42% to now at 23%. So weak hands of public have sold Dixon in last 4-5 quarters, and strong hands of FIs and DIs have bought it big time. And if you look at the share price, Dixon crashed badly during after your Q2 and Q3 results, but that was actually a buying opportunity. From there, it has already rallied to levels of 5,500 plus. And if you look at the PE ratio, it's trading at a very expensive P of 118, market cap of 32,000 crore. But like I said, electronics is a sunrise sector. At the end of the day, you need to take a call whether you are comfortable with this kind of valuation or not. Maybe a better strategy would be to buy these kind of stock in a systematic manner on correction. Next, if you look at another stock, it's your Keynes Technology, another EMS company. FIs have increased their stake from 7.9 to 9.9%. DIs have added it from 11 to 12, 13 and now 15.5. So FIs and DIs both are buying it. Public holding has reduced from 16 to 15 and now at 10.9%. And if you look at the share price, there is already a sharp rally in Keynes from levels around 800 to currently 2400. So nearly 2 times growth in last 1 year. And valuation is crazy high at P of 143. Market cap is around 15,000 crore. Next, we have got Syrma SGS, where both FIs and DIs have increased their stake from 4% to your 9.27%, and DIs have added it from 7 to 8 and now 9.24. So consistent buying in last 2-3 quarters from institutional investor, and public holding has reduced from 41 to 34%. So significant fall in weak hands of public in Syrma SGS, and promoter holding has been constant. Again, share price has rallied a lot from levels of around 300 to currently at around 650. And if you look at the PE ratio, it is trading at a PE of 87, command a market cap of around 11,500 crore. Next, we have got PG Electroplast, again an electronics company. So institutional investors are buying these electronics company big time. And if you look at FIs and DIs, FI holding has increased from 1.9 to 8%, so significant increase in holding. DI holding has increased from 1% to 6, 7 and now 13.4%. Although your promoter holding has reduced from 65 to 53%, but the weak hands of public have sold from 33% to 24%. So again, share price has rallied from levels of around 1100 to currently at around 2000 rupee. And if you look at the PE ratio, it's at 55 PE, market cap of 5,000 crore. So as compared to the other EMS companies, valuations are reasonably better. Then if you look at next stock, it's Amber Enterprise. Again, EMS company, FI holding has increased from 23 to 24 and now 29%. DI holding has increased from 11%, in fact 8% to 13, then reduced to 11. But look at it, from there it is at 13%. So net DIs have increased their stake in the company, and public holding has reduced from 24% to currently at 16.9%. and promoter holding has been constant in the company. So if you look at the share price, again there was a correction during the early phase of this year, and from May level it has rallied a lot, currently trading at levels of around 3000. In terms of valuation, trading at a PE of 61.8, market cap of around 10,000 crore. Next we have got EMI India, which is basically an electronics retailer, where DIIs have increased their stake from 10.9 to 15%. In fact, they've consistently added it in last 3-4 quarters. FII holding has increased from 2 to 3 and now 4.5%. Promoter holding has slightly reduced, but net public holding is reduced from 12% to 7.3%. Again, share has jumped a lot from levels of around 60-65 to currently at around 160, and stock P is at around 44.4. So like all your electronics company, Electronic Mart has also rallied quite a lot in this recent rally and trading at a market cap of 6,300 crore. Next is textile company KPR Mill. We covered this company during the analysis of the entire textile space, and if you look at DII and FII holding has increased from 3 to 4%. DII holding has increased consistently from 11 to 13, 14 and now 15%. So consistent buying in last 3-4 quarters. Public holding has been on the very low side and reduced from 8.9% to currently at 7%. If you look at the share price, the KPR Mill has been consistently growing from levels of around 550 to currently around 850, and valuation wise it is trading at a PE of 35.6. Next we have got Gokaldas Export. We have discussed it in the past and already jumped more than 100% since we discussed it. DII holding has increased in the company from 3.6% to 30%. So big time buying. In fact, if you look at recently, from 24% it has increased significantly, and even FI stake from 11 to 16%. We have discussed in the video why promoter holding is reduced. It's mainly because the promoters are PE firm that have made good money, so they have reduced their holding. But net public holding in the company is reduced from 52% to 40 and now 39%. If you look at the share price movement, Gokaldas has rallied quite a lot from levels of 350 to currently near 1000 rupee, and if you look at the PE ratio, now it is at 36 PE and market cap of 5,800 crore. Next stock in the list is your Arvind Fashion, a retail company. DI stake in the company has increased from 8% to 11, now 13%, and FI stake has increased from 9 to 10%. Public holding in the company is reduced from 40% to 35%, and promoter holding has been constant. If you look at the share price, Arvind has also rallied a lot in last 2-3 quarters and currently trading still at a PE of 15.5, market cap of around 5,000 crore. Next we have got couple of QSR stocks. First is Devyani International, where DIs are buying it consistently from levels of 4 to 5, then 6, 7, 9. Although they have reduced it slightly, but it's because your FIs are buying it from your 8% to 9, in fact from 6% to 8, 9, 12 and now 13%. So consistent buying from institutional investors and consistent selling from weak hands of public from 24% to now 15.6%. If you look at the share price, Devyani also rallied a lot during the bull rally, but there is a significant correction around 10% from the peak and currently trading at levels of around 198. P ratio is on higher side at 100, of course, because it's in growth phase, so you can't just look at it like that. Market cap is at around 24,000 crore. Next is Sapphire Food. We have, by the way, discussed the entire QSR space in a dedicated video. If you look at promoter holding, it has reduced in last 2-3 quarters. But if you look at the FI holding, it has increased from 12.6 to 18%, and DI holding has increased from 16 to 29%. Your weak hands of public have sold this company from highs of 24 to 23 and now it's 6.8%. If you look at the share price, there's not much movement. Net in 1 year, it's pretty flat. Of course, it jumped, but then there's a correction, and net there's not much growth. If you look at the valuation, it is trading at a PE of 40.9. So looking quite attractive in this QSR space as compared to the other QSR company in terms of valuation. Market cap is at near 9,000 crore. Next, we have got a few capital goods company. First is Prince Pipe, where DIs are buying it big time. Look at this, from 11% to 13, 14, 15 and 16 and now 18. So consistent buying in last 7-8 quarters. FI stake has increased from, has actually reduced from 6 to 5%, but net public holding has reduced from levels of 21% to 19, 18, 17 and now at 15.4%. Promoter holding has slightly reduced, but net it's the strong hands of DIs that has bought Prince Pipe big time and weak hands of public have sold it. If you look at the share price movement, after a sharp correction last year, Prince Pipe has moved, but then again it has not rallied quite a lot. And of course, P is looking high at 61.6, but it's mainly because these piping companies' margins got badly impacted because of increase in crude oil price and expecting margins to improve going further. So P should come down. Market cap is currently at levels of 7,700 crore. By the way, we have already discussed Prince Pipe multiple times in past. Praj we have also discussed where promoter have holding has been constant, but FI holding has increased from 18 to, actually it has reduced this quarter, but DI has looked at it from increased to 8.4 to 10, and public holding has net reduced from 41 to 40 and now 39%. So if you look at the share price, again Praj has also rallied in last 3-4 months, but if you look at the valuation, it is trading at a P of 41, market cap of 10,500 crore. So this video is just to give you an idea in terms of which stocks institutional investors are buying. Again, we can't discuss it in depth regarding the valuation and everything, that requires a separate video. Next is APL Apollo Steel Pipes, where DI holding has increased from 10 to 11, 12, and your FI holding has increased from 24 to 25, now 28%. Weak hands of public have sold it from 34 to 28.9%. Share price also has rallied from levels of around 1100 to currently around 1700, and valuations are on higher side at a PE of 65.8. Market cap is at around 47,000 crore. Next we have got auto company Tata Motors leading the electric vehicle space in four-wheeler industry in India. If you look at DI holding, it is consistently increased from your levels of 11 to 13, 15, although slightly reduced, but again increased to 17.3%. FI holding has also increased from 13% to 15 and now 17. So consistent buying from both FIs and DI. Your public holding has reduced from 25% to 18%. Next, if you look at the movement, its share price has increased from levels of around 400 to currently around 650, and PE ratio, if you look at it, P is still 22, market cap is 2.4 lakh crore. Next we have got a small auto auxiliary company, Precall. We have recently made a video on this. DI holding has increased slightly from 5.5 to 5. Now there's not much movement, but look at this. FI holding has increased from 2.8 to 3.96. So, and net if you look at public holding, it has reduced from 53 to 51.9%. We have discussed this increase. It's mainly because of institutional buying from Minda Corp. If you look at the share price, Precall share has jumped from levels of around 200 to currently at around 340, 350, and PE is around 33. Market cap is just around 4,000 crore. Next we have got Tata Power, where DI holding has increased from 14 to 15%, and FI holding has increased from 9.7 to 10, and public holding has reduced from 28 to 27%. Share price has jumped from levels of around 220, it fell down, and again it's jumped to currently at around 250 rupee. In terms of PE, it is looking decent at PE of 24. Market cap is around 80,000 crore. Next we have got TD Power System, where your DI holding has increased from 16 to 33%. FI holding has increased from 2 to 10%, although it's because promoter holding has reduced from 58 to 34, but net public holding has not increased. So basically the entire stake sale from promoter is absorbed by FIs and DIs, and public holding has not increased. In fact, it has reduced consistently, so that's a very positive sign. If you look at the share price, again it has grown from levels of around 120, 150 to around 250 rupee and trading at a PE of 39 with a market cap of around 4,000 crore. Next we have got SJS, where your DI holding has increased from 12.6 to 30%, FI holding has increased from 5 to 14%, because promoter holding has reduced significantly, but the thing is public holding has just increased by 3%. So entire stake sale from promoter is absorbed by FIs and DIs, slightly increased in public holding, but net it's the institutional investors that have made this buying. Share price has rallied from levels of around 400 to 700, and in terms of PE it is at around 35, market cap of around 2,000 crore. Then we have got Laurus Lab, where both FIs and DIs have made have increased their stake from 22 to 24, and DIs are consistently buying it from 4 to 7, 9, 10 and now 11%. Public holding is consistently reducing from 48% to 47, 41, 40, and now 37.7. So last 8-10 quarter, institutionals are buying it and public is selling it. Then if you look at the share price, there is a significant correction in Laurus Lab, but again from these levels it has rallied slightly. Net there's not much movement, but trading at a PE of around 37.9 at levels of around 400. If you look at next stock, it's Jubilant Ingrevia, where DI holding has increased from 2%, in fact 0.7 to 2, 4, 5, 6, now 9%. And FI holding has increased from 6.1 to 6.3. Public holding has reduced from 37% to currently at 32%. Promoter holding has been constant. So weak hands of public is selling and strong hands of DIs are buying Jubilant Ingrevia. If you look at the share price movement, actually not much movement. Your entire pharma space has not grown. So it's been trading and in a consolidated manner. And if you look at the share price, it's trading at an attractive PE of 25.6 and market cap is around 7,300 crore. Okay, we have got some more stocks on the list. First stock is HFCL. FI holding has increased from 6 to 7 and now 8%. DI holding has increased from 2.7 to 2.9 and 4.6%. Public holding has reduced from 51% to currently 49%. Then share price has been flattish, and if you look at the PE ratio, it is trading at a PE of 32.8. Next we have got Titagarh Rail, where DI's holding has increased from 6% to 9 and now 10%. FI holding has increased from 6 to 7 and now 16.8%. Public holding has reduced from 40% to currently at 27. So strong selling from public and strong buying from institutional investor in Titagarh. Share price has rallied big time, and if you look at the PE ratio, it is at expensive PE of 47.8. Market cap is 10,000 crore, but it seems there is a bright growth prospect for Titagarh because of the railway modernization in India. Then we have got Bikaji, where DI holding has increased from 9 to 10, 12, now 13, and FI holding has increased from 3 to 5, now 7. Public holding has reduced from 10% to now at 4%. If you look at the share price, not much movement, although it was at around 350, currently trading at around 500, and market cap is around 12,000 crore, PE is around 79. Then we have got NRB Bearings, where DI holding has increased significantly from 11 to 19%. FI holding has actually reduced, but net it's the public holding that has reduced from 17% to now 15.5%. If you look at the share price, it was trading at around 140, 150 during April period, and now it is at around 280. And if you look at the PE, it is at PE of 27. Market cap is just around 2,600 crore. Next, we have got Vishnu Chemical, where DI holding has increased from 0 to 6.8, and FI holding has increased again. Public holding has reduced from 24 to 23%. Then we have again share price has been trading flattish, and if you look at the PE, it is just 15.6 PE and a market cap of 2,000 crore. Next we have got Nippon India Mutual Fund, where DI holding has increased from 9% to 10 and now 14%. FI holding is up from 4.8 to 5%. Public holding has reduced from 11.9 to 6.9%. Share has also rallied a lot in last few months, but trading at an attractive PE of 27. Market cap is around 23,000 crore. Next is Nykaa, where DIs are consistently buying it from 2.9 to 3, 6, 7, 11 and now 14%. Public holding has reduced from 38% to 23%. In terms of share price, Nykaa has been correcting and consolidating for a long time, and currently trading at a market cap of 41,000 crore. Of course, we can't just look at the PE ratio here. Next, we have got Gateway Distripark, where we have already discussed the logistic space recently. DI holding has increased from 37 to 38, 39, 40, now 41%. FI holding has slightly reduced. Net public holding has reduced from 14 to 13, now at 13.04%. Share price has rallied in last few months, but trading at attractive PE of 18.6 with a market cap of around 4,500 crore. Next stock is Sula Vineyard, where DI holding has increased from 10 to 17%. Public holding has reduced from 55 to 35%. FIs has increased from 6 to 20%. So significant buying in Sula Vineyards from both FIs and DIs. Public holding has reduced significantly. Share has jumped from levels of around 300 to 500 and trading at a PE of 44. Next we have got final stock, which is Paradeep Phosphate, where DI holding has increased from 20 to 21 and now 23%. FI's holding has increased from 5.2 to 5.5 and public holding has reduced from 18 to 17, 16 and now 14.78%. In terms of share price movement, it is trading, although there is a jump in last few months, but net it has not grown. It was at around levels of 60, 65 a year ago and similar levels currently, trading at a PE of 44.8 with a market cap of around 5,500 crore. So if we quickly conclude, it includes banks and financial stocks like Union Bank, IDFC First, Shriram, Credit Access, RBL, Spandana Spooty, J&K, Canfin, Prudent. Then we have got few IT stocks like L&T Tech, Sonata, Newgen, Sign. Then we have got some electronic stocks like Dixon, Keynes, Syrma SGS, PG Electroplast, Amber, EMI. Then few textile stocks, KPR, Gokuldas, Arvind. And then we have got a couple of QSR stocks, Devyani Sapphire. Then we have got Capital Good Company, Prince Pipe, Praj, APL Apollo, then Tata Motor Precall from Auto Space, Tata Power, TD Power, and from your power space, then SJS, Laurus Lab, Jubilant Ingrevia, HFCL, Titagarh, Bikaji, NRB Bearing, Vishnu Chemical, Nykaa, Praj, Sula Vineyard, Paradeep, Nippon, Gateway District Park. So I hope this would help you identify stocks where institutional investors are buying and weekends of public are selling. So clearly there are few themes and sectors where institutional investors are finding value. And the first such sector is financial sector. That is not a secret that we are in a new credit upcycle with best ever asset quality, and that would result in great performance for banking and financial sector. We have already discussed it multiple times in the past. Although majority of stocks have already rallied in last 1 year, but it seems there is still a lot of growth potential. Then second sector where there is high buying is EMS sector. Again, I have covered the exponential growth potential in the electronics industry and the top stocks in this sector. Although they have also rallied a lot and trading at expensive valuation. Maybe a better strategy in this sector is to nimble good stocks in a systematic manner. Apart from this, there is some buying in your mid-cap and small-cap IT sector, then textile, then few power stocks, then few capital goods stocks and so on. Clearly, institutional investors are not yet increasing their stake in chemical sector, then pharma is also not a preferred choice except for a couple of stocks. But net this is a quite exhaustive list and this buying from institutional investors instill good confidence among retail investor. Now tell me in the comments, which stock from the list are part of your portfolio and let me know if you want me to cover any specific company from this list in detail. I'll see you next video. Till then, take care.